हेलो फ्रेंड्स, नमस्ते। वेलकम ऑल ऑफ यू टू माय चैनल। आज को डिस्कसन में हामी चाहिँ हाउ वी कुड भ्यालु द भ्यालु अफ द लिभर फर्म र अर्को चाहिँ भ्यालु अफ द अनलिभर्ड फर्म इन द लाइन अफ माई प्रिभियस भिडियो द्याट्स अल अबाउट योर वाइ क्यापिटल स्ट्रक्चर रिलेभेन्ट टु द कम्पनी द्याट डिस्कस बाई द डेभिड डुरान इन 1952 र आजको डिस्कसन भनेको चाहिँ हामी चाहिँ बेस्ड अन द गिभन इन्फर्मेसन हाउ वी आर गोइङ टु एस्टिमेट द कम्पनीज भ्यालु, जसको लागि मैले आजको डिस्कसनमा के राखेको छु भने द्याट्स अल अबाउट योर भ्यानन फन्डामेन्टल अफ फाइनेन्सियल म्यानेजमेन्टको बुकको सेल्फ इलस्ट्रेट एक्जाम्पल फ्रेन्ड्स. ओके, बेसिकली बिफोर सल्भिङ द क्वेसन्स I would suggest you to read the question carefully and note the given information. Like in these questions, you are given the earning before interest and tax 3 million, corporate tax rate is 40%, and it is able to borrow at an interest rate is borrowing rate is 14%, whereas the equity capitalization rate in the absence of borrowing is 18%. While earnings of the company are not expected to grow and all earnings are paid out to the shareholders in the form of dividend. And next information we have, that is in the presence of corporate but no personal taxes, what is the value of the company in an MM means here Modigliani and the Miller world with no financial leverage? First question. Second is that if we have a 4 million debt, what would be its value? And if 7 million debt is there, how we are going to estimate the value of the company? Okay, just you have to understand here, if the company uses debt and equity both, that term is known as levered firm or levered company. Or if the company finances assets with just equity, that is called unlevered firm. Okay, now based on this given information, what I at first you need to read the question and organize your all the given information as I did here. Then next one is that first question is that if the value of the company, what would be the value of the company with no financial leverage? Okay, then you have to understand here, this is nothing, this is your value of the equity, that is you are going to estimate it. So value of the equity here, EBIT into 1 minus T, since we don't have the interest, since this is the case of in the absence of, that is the borrowing. Even though you are given some information that may not be useful, like in this case, even though you are given the borrowing rate 14%, we are not going to use it. Okay, now what about the value of the unlevered firm? So what we do here, simply look at your EBIT. EBIT we have a 3 million. Then I would use the 1 minus T is the corporate tax rate is 40%. Then whole divided by your cost of equity capitalization rate, that is the equity capital rate, that is the 18. So you would have a 10 million amount is our value of the unlevered firm. Okay, now what about the, if the company uses, if the debt is now 4 million, now what about the value of the levered firm? Then value of the levered firm is simply, you can say that value of the unlevered firm plus present value of debt tax sale, that is the BTC. Okay, what do you do here? Simply no need to calculate your value of the unlevered firm again, 10 million plus, and this is the first case is your 4 million. 4 million, that is the notation for the B is there, into your corporate tax rate is 40%. So you would have a 11.6 million is now value of the levered firm. You could see here, because of using debt, your value of the company increases by 1.6 million here because of tax benefit of with the debt financing. Now what about the C? Again, value of the unlevered firm plus amount of debt we have, in this case 7 million. Now what I do here, just multiply with the tax rate, that's 40%. Now you could see here, now it is 12.8 million is. Now we could conclude that if the company uses the more debt, then even with the assumption of corporate tax, because of tax benefit of debt, yeah, you can say that present value of debt tax sale, your value of the levered firm increases. Okay, but remember friends, when you are using debt, in coming days I will be discussing about the, if the company uses the more debt, then there might be the chances of bankruptcy too and agency cost. Then in coming days, I would be discussing how we could value the company if we have the chances of bankruptcy and agency cost too, friends. Okay, friends, these are the things that I would like to share today. If you like this content, please like, subscribe, and also share this channel. Thank you all of you for watching this video. Please take care.